Hey guys, how are you? Vladimir here from Traders Academy Club, and this video that I record today is a very important video as I want to discuss about a very important subject that most of traders understand its importance, familiar with the term and the jargon, and in reality they ignore it. And this is what the subject which is called risk reward ratio. What is the risk reward ratio and why is it so critical? To present the importance of that, I would like to show one of the trades just for the example that we were dealing with this week in Traders Academy Club. But before I do that, if you are new to this channel, first of all, welcome to our community. I would like to invite you to subscribe to the channel and to join our trading club, the Traders Academy Club. As well, you can join our free Telegram channel. Both links could be found below this video in the description and in the pinned comment. And now, as I said, I would like to present you one of the trading ideas we discussed this week, and that was the oil. Here is our trading report from Traders Academy Club. Now, one of the instruments we were analyzing and looking to trade, this is my trading report from the Academy. One of them was the oil. The analysis that we had on the 1 hour chart is that we were facing 3 lower highs, 3 lower lows. As you can see here on the chart. Okay. And the idea afterwards was, after the retraces, the corrections, we expect bearish continuation. Where does the importance of the risk reward comes in, and why is it so critical? So what is the risk reward? First of all, risk reward means how much you risk versus how much you expect to get a reward. Most traders are aware of that, right? We all would wish to risk, let's say, 20 pips and to gain 200 pips, and as many of such successful trades would be the better. But in reality it's impossible. In trading, when you approach to a trade, when you enter a trade, you really have no idea how it's going to work and will the market agree with your analysis or not. The idea in trading is, because this is a business of numbers, business of statistics, you need the higher probability setups, and that is something that you gain when you work with multi-timeframe analysis to choose your higher probability setups, and by trading the higher odds, where whatever you risk is X, but whatever you are looking to gain is bigger than X. And this is something that will keep you growing, keep you going forward in your gains, in your returns for the long run. Because even with 50% success rate, with risk reward ratio of 1 to 2, you would be gaining fantastic returns. Even with 40% success rate. This is a subject that, again, most people understand but never pay attention to that. And the idea is very simple. If you take a little table, okay, and you put here plus and minus. Let's say we are risking 1% per trade, that's our risk, and our reward is 2%, just 1 to 2 risk reward, simple. And even if we have 6 losses, I say 1% for each, and only 4 profits of 2% each, we still end up with 8% in a plus versus 6% in a minus. So you can't, there is always a way to cheat yourself, your setups, whatever, right? Technical rules. You cannot cheat numbers. The numbers are real and the numbers are clean. Okay, so that's the importance of risk. This is, first of all, what is the risk reward and the importance of it. Now I want to show you how that looks like. So the first trade we discussed was on Monday, and that was based on these 3 waves, and then we got this ABCD correction. So our assumption was that this breakout should lead for the move down. So generally speaking, if this is the ABCD, this is about to be the entry, the protection would be somewhere above the most recent high. Okay, so that's the risk. And in that case, it wouldn't work out, as we got the correction deeper. No problem, because the pattern still remains on. According to the analysis in a daily bearish divergence we analyzed in the multi-time frame and the bearish divergence, we expect a correction. Okay, so our second plan was to look for setups after this correction. And we had two scenarios we followed for that, and I want to show you that. This is directly from the video, okay, the live market analysis we have in Traders Academy Club, and one of the scenarios we were following was the corrective cycle in a format, a structure of a triangle. After the trending structures, the pair can move or in triangle or in range. Triangle is one of the ranges, or in ABCD structure. In that case, the oil chose to do the triangle, and I will show you that in a second, right here. And here is the importance of the risk reward I was talking before. So the first trade, which I showed you here in the analysis, lost -%. We cannot avoid it. We have to accept it. But look at the second one. Well, if you follow the rules, of course. Then the second one is with the entry of the triangle. You would want to protect the most recent high. Actually, this high is enough, but you will want to go a bit more conservative with this protection. So that becomes the risk. And now you look at yourself on the reward. And if you keep this 1 to 2 at least before you are finalizing your trade, you are cashing out. If you keep this risk reward ratio, you lose some and you gain some. But the ones that you gain, thanks to the risk reward, will take you forward, will boost your gains. You would gain more than you lose in the same analysis, because while these two setups were in play, the higher time frame analysis that we had, the bearish divergence from daily, did not change anything. The 4-hour did not change anything. The only thing that changed were the way that the setups performed. The first one failed, the second one paid. So was the analysis wrong? No. Was the performance wrong based on the technique? Also no. Sometimes you lose, sometimes you win. You cannot ever predict in advance when the market will agree with you and start the move right away and when not. And that's why I wanted to show you in this video and explain the importance of risk reward. So how to gain the best risk reward opportunities? By working with multi-time frame analysis. When you analyze the higher time frames and then you drop to lower time frames, what happens is the higher time frame give you the room of the movement according to the analysis you apply with your techniques. I work with divergences and cycles. That's my techniques. It doesn't mean it's the best. That's techniques I work with. And according to that, I choose I start from the higher time frame. It could be weekly, daily, or 4-hour, doesn't matter. And then I go lower to verify the direction I expect on the lower time frames. And that's where I find the timing for the entry. Okay, so if my analysis is wrong, I will end up with a loss. But if the analysis is correct, what I might face is maybe one loss and then one profit. And the profit, that's where my job as a trader, my responsibility as a trader, when I trade, that's where my responsibility comes in. I have to remember the risk reward thing and look to aim more than I lose. Because I cannot know in advance when the market will agree with my analysis and my technique, my setups based on my techniques, and when not. All I can is follow the facts. And that's why I wanted to record this video. I know this subject is familiar. I know you probably heard about it so many times. But as I said at the beginning of the video, most traders are aware, and yet most traders don't care. That's the reality. You want your initial take profit, initial risk reward plan to be as high as possible, at least 1 to 2, for the reason that you will be able to run your management as the trade goes. So you will be able to manage your exposure as the trade develops. Okay, so that's for me an important subject, and I wanted to bring it up to the community. I know you are familiar with that, and I know you probably heard about it. If not, then I'm glad if I can help from the beginning. And if you are aware of that, then don't underestimate this subject. We all want more success rate, right, in terms of how many more times we make more winners than losses. But success rate without risk reward, proper risk reward, will mean nothing to you. Because if you work with 90% success rate, but you profit just 10 pips for every 100 you win, you would not be able to make money. On the 9 times you earn, you would make 90 pips. And 1 time you lose 100 pips. You would not be able to make money. So remember, success rate without risk reward means nothing. Okay? Very important. Don't let the numbers fool you. You can cheat your techniques, you can cheat analysis, you can cheat many trading rules. You cannot cheat numbers. Numbers are clear. Okay? So that's all for this video. I hope you, when you trade, you pay attention to this subject and you respect the risk reward and you work accordingly. And if you have any questions on the subject, feel free to ask me directly in the comment section, and I'll be more than happy to answer and to help you with that. Also, once again, I would like to take the chance and to invite you to join our Traders Academy Club, our trading club, and to enjoy from all the trading ideas and the market analysis we have, backed up with the trading report as you just saw in this video, and I hope you find it useful and helpful in your trading journey. Thank you very much for your time watching this video. I'm Vladimir from Traders Academy Club, and I wish you all the best. Stay safe.